Everybody, thanks for joining me. Before we get started, please go ahead and click subscribe to my channel to keep up with all of my latest investing and personal finance content. And check out the link you see on your screen right now for a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, there are some great bargains in the stock market right now after the downturn we've seen in 2022. It's really hard to pick just one or two or three stocks to talk about, but I want to try and I want to use this opportunity as kind of the concept of generational wealth creation. Stocks that are have a pretty nice margin of safety that are going to be around when you're a generation older or you end up passing it to your children or things like that. And companies that still have a lot of growth potential and have a lot of potential to beat the market over the long term. So there's three stocks in particular that I think are great generational buys right now. If you have that kind of time horizon. The first one's Amazon, and that's a company that doesn't really need much of an introduction. We all know Amazon for its e-commerce platform. I don't know about you, but I can't go a day or two without another Amazon box showing up at my doorstep for one reason or another. And it's really rare to see a company that's a combination of two dominant businesses like that. Amazon has about a 40% share of e-commerce in the United States. It has about a third of the cloud infrastructure market through its AWS, Amazon Web Services business. Both of them have a lot of room to grow. Amazon, for one, has a lot of international potential to grow. It doesn't have that 40% market share in a lot of overseas markets that it operates in. And e commerce itself only makes up about 15% of US retail right now. So that should continue to go up over time. As far as the cloud side of the business, which is by far the most profitable revenue stream Amazon has, um, cloud services revenue has something like a 30% margin, as an operating margin for Amazon. The market itself is expected to about quadruple in size by 2030. So even if Amazon can just maintain its market share, you're talking about five times the cloud services revenue that it's making right now. That's not to mention other potential businesses Amazon could get into, like healthcare, that it can really make an impact in. Um, Down about 50% from the peak, Amazon just seems like kind of a great generational opportunity right now. Number two, Bank of America, ticker symbol BAC, one of the best run banks that no one gives it credit for just because of how it was operated before the financial crisis about 15 years ago. So the asset quality of the bank has improved tremendously since then. Bank of America's asset quality has really shifted. The loan portfolio, for example, is much more commercial based than personal lending based or consumer lending based. They have less exposure to things like credit cards and home equity debt, and much more exposure to more predictable and stable forms of lending that are not very prone. So, Bank of America is down 35% from the highs, despite it being a big beneficiary of the rising rate environment. Bank of America has one of the lowest costs of capital in the banking industry. If you have a savings account at Bank of America, you know what I'm talking about. They don't pay very much on deposits. In fact, over $700 billion of their deposits are non interest bearing. This gives them a big advantage when rates rise because they can charge more on loans without paying much more for their deposits. Great for profits. We're already seeing that baked in. And the bank estimates that if the Fed keeps raising rates, it would add billions more to its net interest income. Um, Interest rate environment aside, this is a well-run bank. The management that's been in place since just after the financial crisis has done a great job of improving asset quality, efficiency. They're really focused on technology, just doing a great job. And the bank is trading at a very low valuation, just over its book value right now. Great opportunity to add Bank of America to your portfolio. My personal biggest bank stock investment and one I plan to hold for a long time. Number three is a real estate company called Digital Realty Trust. Ticker symbol is DLR. This is a company that I think will be in the dividend aristocrats club one day. It would be already, but it hasn't been around long enough. It's been around for 17 years and has increased its dividend all 17 of those years. This is a company that owns and operates data center properties. These are, think of them as the physical homes for the internet. Every time you're accessing a cloud based application or uploading photos to your social media, all of that has to physically live somewhere. And that's where data centers come in. So they operate data centers. Obviously, the amount of data that's flowing around the world is not getting any lower. So this has a lot of long term growth catalysts in this market. The business is really well run. It has a great track record of beating the market for its investors over time. It went public in 2004 and since then has delivered 1,800% total returns, including dividends. So those are three generational buying opportunities I see right now. I would love to hear your comments about them and see what do you think are the best generational buying opportunities right now. I'll do my best to answer every comment I get personally. Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by the Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.